Hi and good morning. It's Tuesday, 15th of May 2018. Welcome like every day to Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side directly in our webinar. Our goal is quick and smart, but for that daily, so let's have a nice start like every day. And we will start like every day with our risk disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down there. This is me. My name is Jens. I'm the German guy from Admiral Markets. I'm from Berlin, the Berlin office. We are a big international broker. We have over 18 country offices. So my English is made in Germany, but hopefully some of my quality too. But I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, like today, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Leonard's day. On Friday, it's DAX day. Our leading day traders live every business day. And of course, if you'd like to trade Forex and CFDs, you will get many benefits only with us. For example, one of our best sellers, DAX 30 CFD, typical spread of just 0.8 points to the main trading hours. If you'd like to trade, start with 0.1 lots with DAX index CFDs or with Forex, of course, starting with micro lots and choosable leverage and many, many more. Check all the details out on admiralmarkets.com. There you will find also something about our regulatory background and how to contact us. You can call us, you can send us email or visit the other channels like YouTube or Facebook. Also that everything is linked from admiralmarkets.com. That is already enough from my side. Now it's time for Paul. Hi, good morning, good day, Paul. What's your view to the markets today?
Good morning, Jens. Good morning, everybody. I hope you can all hear me loud and clear. I hope that you can also now see my screens as well. Thank you for the introduction, Jens. It's Tuesday, 15th of May already, and we've had an interesting few days, last week or so in the market. So why don't we have a little look at what's been going on? Today, I thought I would focus on sterling and also on Japanese yen, and then also take a little couple of questions. I appreciate last week we ran out a little bit of time, so I'll try and help out and answer a couple of questions towards the end. So why am I looking at sterling? Well, we've just had news out in the UK. So average earnings, so they came out less than was expected. I think 2.6 as opposed to forecast of 2.7. For those of you who are new to trading, okay, my personal trading beliefs, my personal trading method is that I prefer to trade after news. Some people prefer to trade before news. I personally prefer to trade after news. And when it comes to sort of trading any round sort of news, the simplest thing is about expectation. If I had to sum it up in one word, is about expectation. What was the news regarding the actual expectation? So in this particular case, the number was actually less than what was expected, and that will have had a difference in terms of the way people view the market, view sterling, and take those particular trades. And we'll have a look at that in a moment on a sort of a shorter time frame. But what we've had is the sterling was as you've heard me talk about it before plenty of times, we've had sterling strength there for about the last 6 or so months, which has sort of the wheels came off that over the last 2 to 4 weeks, and probably the pound against dollar is the best example of that. So if I just look at, here we go, at the pound against dollar on the weekly chart, I'll just move some of this so we can all see. There you go, there's the weekly chart. Well, you can see that was pound against the dollar, and what we had was a great story there of sterling strength, dollar weakness, and it was a lovely uptrend just grinding its way north, and invariably this came to an end pretty sort of resolutely here around about the sort of middle of April. And what we had there was price ran into the weekly 200 period moving average at the same time as the sort of hitting we have a sort of a resistance level around about sort of 143 to 143.50. And what actually happened was we produced here, we printed what we call a weekly key reversal. Price pushed to new highs, but then actually collapsed and closed on its lows beneath the sort of the lows of the previous week. It was a very bearish signal, and you can see that actually that's what happened. We've talked about that a good deal. In terms, if I go down to the daily chart, we broke that trend line, okay, and we talked about that last week. And when I look at pound against dollar at the moment, it's been we've had a great short opportunity there, but now we're running to the sort of the daily 200 period moving average, and just look at the price action there on the daily chart, ladies and gentlemen. Okay, that's I see that. As there's a battle going on there. Okay, there's a lot of accumulation and distribution going on there. Okay, as the sort of institutions work out what they're going to do next. So I'm looking around that about that 135 level as a level of interest. And when for those of you who are new to trading or joining us for a first time, when I look at these charts, I have a very simple setup. Green bullish candles, red bearish candles, blue 20 simple moving average, a red 50 simple moving average, and a green 200 simple moving average, and then drawing in horizontal lines of support, resistance, and also sort of trend lines that actually stand out to us. And what I look at when I try to do these sessions is I talk about sometimes a big trade, a longer term trade. I try to talk about maybe a shorter term trade, and then also a little bit of something to add to your watch list, a bit of a watch and shoot. And for me, pound against dollar at the moment is definitely a bit of a case of a watch and shoot. Okay, I'm just waiting to see. There's a battle going on there, and I'm just going to wait to see who wins that battle. Okay, and that will be basically either a continuation of the move south, in which case that's further sterling weakness and dollar strength, and I'm happy to be a seller, or we get a break up, a pop up back up towards maybe that trend line that was broken, and that will interest me if price gets back up to there around about 137. So there's no trade on pound dollar today, but definitely add it to your watch list, because there's something it's getting ready to make its next move. In terms of trades for the day, and let's have a look at sterling. Well, let's have a look at one of the old faithfuls, euro against sterling here. Okay, so here it is on on the daily chart, and we talked about the sort of inverse head and shoulders we had after breaking that 87.50 level, which you've heard me go on about since the start of the year basically. Once it put in that inverse head and shoulders, it popped up. We had a long trade here about 87, but actually price pushed up. Price came back down, and once again that 87.50 acted as a bit of significant support, and price rallied up from that. And when I'm looking at it today on the 4 hour, I'm wondering, are we going to get maybe a little bit of a move back down towards those kind of those levels there, in an effort, okay, to basically just build another higher low down around here. And I'm kind of intrigued to sort of trade in that direction, just to test the strength of the market on a shorter term basis. So I'm just going to use this fantastic mini terminal here on the Admiral Supreme edition, okay, which should allow us to put our trades on much easier, much quicker than just having to do it through the existing MetaTrader platform. So we're just with that in mind, what I'm looking at as well, as I said, I think we might just get a little bit of a drift down, okay, a drift down towards this area here, okay, just above, between about 87.50 and 87.65, okay, that's I think a drift down, maybe form another higher low, which gives me indication that we might have the strength to move back. So I'm going to be looking to be a seller around about 88.05. My stop above those highs around about 88.20, and then I'm going to really target down towards about 87.60 here, okay, about 87.60. That will just take me in there, okay. There's a trade there. So once again, what am I doing? I'm risking about 15 pips, okay, of trade risk for a possible target of around 45 pips. So I'm risking 15 for 45. That's about a 3-to-1 trade. I'm happy. Other people may trade differently from myself, but on a basis, I'm always looking for an asymmetric reward to risk ratio. Okay, so I'm happy to take a trade that has a 3-to-1 reward to risk possible potential. So, I'm happy to do that. And as I said, it's more a case of I'm going to test the market. Is this 87.50 area going to be strong enough to hold, okay, form a high low before a perhaps possible move north? So keep an eye on that. There's some interesting opportunities there. That kind of links into, with a little bit of that sort of sterling weakness, okay, that we've seen. If, we talked about FTSE a few weeks ago, I was talking about, I thought it was building an inverse head and shoulders. Yeah, and we talked about it a couple of weeks ago, and I wanted to basically set an ambush for it to come back down to the come back down to around about the sort of 78, 70, 90 sort of level, and then look for it to buy. But actually, as you can see there, it wasn't waiting for me, okay? This was an indication of how the sterling weakness just accelerated. And remember, you know, effectively when we see sterling weakness, we see a rise in the FTSE, and you can see there, that's just told you how strong, okay, the FTSE has been over the last month or so, based upon a good deal of that based upon the sort of the depths of despair of the sterling selling that has been going on. So, you know, I would just be watching that. I think it's getting probably a little bit, you know, just a little bit in the middle of no man's land there. I would just be around about 7200. I'd be watching that just to keep an eye on it. There might be an opportunity there that plays out later this week. Okay, so just keep an eye on that. And I know that some of us are oil traders. Well, that is, of course, let's have a look at Brent whilst we've got a little bit of a sterling, a little bit of a UK sort of focus. Here we go. Daily chart there. You can see that, you know, very nicely, very nicely. Once again, on the weekly chart here, we had, you know, an inverse head and shoulders, which took a little bit of time to play out. But then from the sort of middle of last year, we've just had really one-way traffic there. Okay, one-way traffic. We've had sterling strength. Okay, we had Brent strength. Okay, we had a bit of FTSE sort of messing around, but now what we see is Brent strength, FTSE strength, and sterling weakness, and that has just been a you know, a nice move there. And I'm really be looking at that, watching that to see, right, you know, the next levels up towards around about the kind of the 80 psychological number, and that's what I'd be looking for. I'd be looking for 80 to act as almost like a magnet to draw price towards, and then once it's there, then you start to have a look at how does it react to those particular levels. So I'll just be keeping an eye on that at the moment. There's been some great opportunities on trading oil, Brent and WTI, and yeah, I think that's I think that will continue. So that was a bit of a look at sterling and the knock-on impacts into FTSE and Brent. But let's have a little chat about the yen for a change. Okay, I know a lot of the time we focus on euro and DAX, but I like to try and change it up, mix it up a little bit, and keep it a little bit different, keep you all on your toes. Okay, giving you lots of things to look at. So what we've seen is we had an interesting sort of story with the yen this year. Okay, the yen started the year quite weak. Then when we had, let's say, the sort of the February tantrums, shall we say, when the markets came off a little bit, we had, you know, a push into yen strength, and we saw, you know, yen sort of strength, and we saw Swiss franc strengthen as well. Okay, not a surprise there. They're both still deemed to be safe haven, so when there's trouble, money would flow effectively into the yen and the Swiss franc. That carried on well for you know, for about a month, 6 weeks, and then we saw an interesting, a bit of a strange change in the sense that the Swiss franc dropped and has now dropped to the sort of almost to the bottom of the sort of strength matrix, whereas the yen has kind of re-emerged again after it had taken a little breather. It's re-emerged, okay, to have a little bit of strength over the last couple of weeks, and it's now taking a little bit of a breather, and that starts to get me interested. Okay, you've heard me talk about it time and time and time again. Markets surge then rest, they surge then rest. Okay, and you know, if you catch the surge, well then, you know, you're a happy trader. If the market's in a rest, well, that's okay. You just need to recognize that market's resting at the time, and then you just need to be able to prepare yourself for that next surge. What I'm interested in is looking at is, you know, we've just looked at Brent, haven't we? Okay, we've just looked at Brent oil, and you know what I'm interested in is looking at CAD yen. Okay, just let's have a little look at that at the moment. This is the daily chart of CAD yen. For those of you who are new, very often CAD yen is used as a proxy for oil. All right. Why does that happen? Well, it's very simple. Yen imports pretty much all of its oil. I think it's something like about 98% of its oil. Canada exports the vast majority of its oil. So you've got Canada as an oil exporter, Japan as an oil importer, and Japan is very sensitive to the price of oil. So it's been, you know, it adds to this kind of interesting conundrum we've had, whereby, you know, we've had yen strength, but also, you know, we've had oil strength as well, and it's kind of a bit of a conundrum that we watch. And what I look at here on this CAD yen chart is, you know, we had once again, we had an inverse sort of inverse head and shoulders formed here on the daily chart, okay, back in March, and we've had a really nice run there. Okay, we've had some CAD strength, but now actually I see as we're in a little bit of a block at the moment. Okay, we're in a little bit of a block here, right? This, I'm just going to draw it on. Okay, we're in a little bit of a block. There we go. Let's just draw that in there. Let's get some areas on that. We're in a little bit of a block, and we're just trying to work out, okay, which is the next move that's going to happen. Not only are we in that block, but you know, we're also in between the daily 50 period moving average and the daily 200 period moving average. For new traders, you know, where we like to keep it simple as possible, I like to tell people, well, once price is in between the 50 and the 200, then you're probably best just, you know, keeping away from it, because it's probably likely going to have a bit of a range going on, and that's exactly what we see here at the moment. Okay, that's exactly what we see here. So you know, for new traders, I'd be saying wait to see if it drifts, which moving average controls the market. Will it be the 50 or the 200? For those sort of intermediate traders, you might be looking and saying, well, you know, how is this going to play out within this block? Are we going to get a breakout and then a drift towards the 200? In which case, that's, you know, there's enough distance there for an intraday trade or sort of a swing trade, you know, and you can look at that down on sort of the 4-hourly chart. Okay, at the moment, you know, it has towards the top of that range. Okay, and we've got, as I said, we've had a bit of oil strength, we've had a bit of CAD strength, but it's you know, I see that it's almost in a little bit of a smaller block within a block. That's why I look at that at the moment. So I'd be just very careful. I'd just be watching that to see how that plays out and how that sort of rolls over, and the impact that could have, and the opportunity that it may provide for you. But let's have a look at you know, some of the yen. One of the ones I just want to finish with a trade idea for you. Okay, so here's the dollar against the yen. Interesting perspective, because the last couple of weeks we've had dollar strength and yen strength. All right, so they've been battling it out, and it's not a surprise that the chart reflects that a little bit. Once again, we had a nice reversal here, okay, earlier on in the year, a few weeks back, and we've had a great run on the dollar, okay, great run on the dollar. But look at that now; it's beginning to sort of coil up a bit, okay. We're a bit coiling up. We're just underneath that 200, and you know, I look at that personally as a bit of an ascending triangle in a intermediate uptrend. So our natural reaction would be to buy the breakout, but would be running right into that daily 200. So just keep aware of that if you're looking to buy the breakout of that. What I'm actually interested in is, you know, looking at here on the 4-hour chart. As I said, it's a nice ascending triangle formed, and you know, my view actually is that, you know, I think we could maybe get a little bit of a drift down. It's almost looking like a triple top there, drift down there, okay, back towards retesting that lower trend line, and then we get a decision: do we get an assault north, or do we roll over? And that provides me with you know, an opportunity that's kind of that appeals to me as a trader. So, you know, I'm going to just, you know, once again, I'm just going to sort of try and test that market there, okay? I'm just going to look to have a short position on there to sort of test back in towards the market. Once again, I can just use the fantastic mini terminal, okay, just to basically get a trade on there. So, you know, I'm looking at shorts, you know, around about the sort of, you know, around about the 109.90 area, okay, we're about where we are at the moment. Want my stop above those highs at around about 110.05, just above the big 110 number, and then I'd be looking down towards around about the 109.50, okay, 109.50 zone, back towards the bottom of that trend line for a trade, and then suddenly, you know, I'm risking about 15 pips for about 40 pips of profits. It's about 2.6, 2.7 R, and that trade works for us. Okay, so I hope that gives you a bit of insight. If there's time left, Jens, I'll quickly answer any questions we may have. As always, I've tried to cram in as much as always.
Well, and the focus of our participants of the webinar is GBP US dollar today and Dow today, and also gold. That are the main top 3 instruments today.
Okay. Right, let's have a quick. So we've done pound against dollar. Let's have a look. Have I got gold on here? We've got Dow Jones on here. Okay, let's have a look at the Dow Jones quickly then. Okay, so here we go. Weekly chart. It's been messy all year, hasn't it? Really, far away. But you know, look at that weekly 20 acting 20 period moving average acting as dynamic resistance. Just remind yourself of that. What we looked at is the you know, kind of a breakout there. Okay, that's what's happened there. That's a very scruffy trend line on my part. I apologize, but hopefully you get the idea and the impression. And that's what we saw. We had the daily 200 acting as dynamic support, and then we had a breakout there from the north of it there. On an intraday time, okay, I'd be looking at, we're back towards that 20-period moving average, okay, on the 4-hourly chart. On the 1-hourly chart, I see that as a bit of a false breakout and a bit of a fall away. So if you're looking to people to take profit after the looking to take profit after sort of that move up, I'd be looking at, looking to see, does price react around about that 24,890 level? Okay, does it give me a sort of a bearish pattern there? If it does, then that forms a lower high, and then I'd look to be a shorter away from that. Okay, so that's on the intraday basis. Let's see if I've got gold up somewhere that we can just have a quick look to finish up. Let's bring this up very quickly. So we talked about sort of CAD yen being in a bit of a block. I've said before, I think that gold is in a block at the moment there. That's the weekly chart. Okay, let's just drag that in a bit. You can see that it's just in a little bit of a block at the moment. We're at the bottom of that block. Okay, the daily 200 has been acting as support, and now we've got the daily 20 acting as a bit of dynamic resistance. Nice bearish pin bar there. My own view personally would be that this is coiling up here. Okay, it's coiling up between the 20 and the 200, and I'd be looking to see where does it go from here. Where does it break out? Will the 200 act as support and it go back up towards the north level of the range, or will this this level here, okay, break? Okay, the sort of 1305, 1310, that zone has been very significant support for a while. If it breaks beneath that, well then we could get a drop down towards those recent lows. There you go, Yen. Sorry we overran a little bit there, just trying to fit in as much as possible. I hope that helps everybody.
Fine. Our goal is quick and smart. But for that daily, so tomorrow is another day. Tomorrow is a new day trader of the day. Thanks to Paul. Thanks to all participants. And if you like, usually all our webinars will be recorded and a couple of hours later available on our YouTube channel. Thanks for today. All the time. Have good and safe trades. Greetings from Berlin office. Bye-bye.